Welcome back to the special analysis of the Reserve Bank's monetary policy. The minutes are out and I have been speaking with the external members of the MPC, Dr. Shashanka, Bhide, Jayanth, Varma and Ashima Goyal. Gentlemen and Ashima, thank you very much for waiting on. Ashima, you are sounding fairly confident about growth. Would you therefore now say the MPC's mandate should be to not pause till 4% comes into sight, since that's the given mandate?
I think that there is still a lot of uncertainty about growth and inflation. Growth also because of global shocks. There could be a global slowdown. China is slowing down. It's not that this won't affect us. So I think the Indian monetary policy has been very structural in the past. It's not focused on counter-cyclical. And that is why I talked about this negative and positive real rate, because you want a neutral rate that keeps inflation stable at your target. But shocks need to be accommodated by a rise or a fall, so that you have counter-cyclical policy. So the problem with going for extreme front-loaded hikes is that, again, monetary policy also acts with a lag, partially forward-looking. So you might overshoot, you might kill growth or hurt it so much because we are coming in out of double shocks where growth has been badly hurt. There's still high unemployment. That is why after you reach a real positive rate, you're near the neutral rate, you need to watch data. What are the shocks coming and respond accordingly.
What's the neutral rate in your mind now, Ashima Goyal?
It's difficult to estimate that precisely, but I think finally, all this time we were talking about supply chains unwinding and inventories being high, and this is finally materializing with this slowdown. You are seeing commodity prices fall, oil prices fall. You're seeing, even though firms expect prices to rise, but I think their costs are going to be falling, so their margins, they'll be comfortable without really raising prices. Okay. Agricultural real wage growth is flat. Yeah?
Yes.
So we need to watch for these supply shocks bringing inflation down.
Okay.
And therefore, the effect of the real rate is more on demand, say housing loans, credit, and so on, durable, and housing market has just revived.
Yes.
It does not affect inflation very much. It's these supply side factors that affect it more. Okay. So therefore, we need to watch that if inflation is coming down from the supply side.
Okay. Dr. Bhide, I wanted to ask you, Dr. Ashima Goyal's analysis seems to indicate that even if there is a global recession, our exports could be rescued by our greater digitalization, support coming from the government, etc. Do you worry that growth has a downside shock from exports?
Yes, I mean, I do worry about it, and I think there's certainly uncertainty attached to the growth projections also, and I think so. The concern, between the inflation and growth is that high inflation combined with lower growth obviously is a more difficult problem, and therefore I think the focus on inflation is important. But I do think that the global slowdown certainly has adverse effect on our own exports. There may be the various mitigating factors as far as exports are concerned, but I think they probably would reduce the adverse effect. But I think the impact of slower global growth certainly is going to have negative effects on our own export performance.
Okay. And the question that I asked Ashima as well, would you think that since 4% is the given mandate, the MPC shouldn't pause till that number comes in sight? At the moment, even 1 year ahead, you're not anywhere near 4. Dr. Bhide.
No, so I think it's very, it's very difficult question in the sense that while 4% is the target, we're not talking about getting to 4%, in terms of a quarter or 2 quarters.
Yes.
So it's difficult to say, about the timing of bringing the inflation rate down to 4%. But I think what we certainly should begin to see is inflation rate on sustained basis coming back to, I think, well within the tolerance band that we have.
Okay. Okay, well, that it appears to be. In your own band, it's coming down to 5.8 according to the RBI's forecast for the fourth quarter, and 5%, of course, in the next quarter. I think I'm running out of time. Last question to you, Dr. Varma. You know, a note will have to be written, it looks like, because you all are not going under 6 by September from the RBI's own fan chart and forecast. Is that a pressure that will force the MPC to not pause? Because you have to explain to Parliament that you don't have 3 quarters in a row of you know, under 6% inflation. Is that a pressure that will impact the MPC's decision making?
I don't think so, because monetary policy, we know, acts with lags, and there is nothing that we can do today that would avoid a failure if that is really around the corner. You know, what could have done it was, you know, well, what we did a year ago, right? So what we're seeing now is the effect of what we did a year ago, plus, of course, what the world did to us. And, you know, what we do in our next meeting can change neither, right? It cannot change Vladimir Putin's mind, and it cannot change what repo rate we had a year ago. So those are the things which are driving the inflation today. We have to be focused on what is the likely situation 3 quarters ahead, 4 quarters ahead. We cannot be, you know, we cannot be reacting in a knee-jerk fashion to this. If there is a failure, there is a failure. The failure will be accepted in all humility, and the failure will be, you know, will be explained to the best of our ability.
Fair enough.
But I think what is required for people in this kind of position is to have the humility to accept failure when failure is happened.
Okay. Well, to be fair, sir, I'm being unduly harsh by putting the question in that fashion. We just did a show where we looked at the deviation from given targets for a whole host of countries, and India's deviation is among the least, you know, at about 2.7% higher than target. For most other countries, the deviation from target is much higher. Need I say, for US and Europe, it's well over 6 percentage points. So I'm being a little unfair to the members of the Monetary Policy Committee. Thank you very much for being kind enough to speak with us after the release of the minutes.